All right, so a lot of stuff has been happening this week with cryptocurrency. The whole crypto market has crashed. Coinbase has crashed as well. At a certain point, it basically got slashed in half. It reported earnings. We're going to discuss a couple of numbers in the earnings report, but I want to focus more on what was mentioned during the earnings call because I do think it's a bit more important, especially in the current, well, let's call it crypto winter/bear market. Now, the bad thing with the cryptocurrency market right now is the crashes of those stable coins, right? LUNA Terra. And in the future, I am fully expecting Tether to explode as well. Those are stable coins that are backed by nothing. Fugazi, it's a wazi, it's a woozy, it's fairy dust. So now you might ask yourself, so why would I even consider buying Coinbase, right? Because right now with this whole thing going on in the cryptocurrency market, why should I even consider Coinbase as a thing to invest in? Well, first of all, if you think that in the future cryptocurrencies will still be here, tokenization, blockchain, things being built on blockchain, etc., will be a mainstream thing, then I do believe that yes, Coinbase is something you might consider right now. It's just a play on the whole crypto economy, the future of it as well. You don't have to pick a specific cryptocurrency, you just take the infrastructure. This is what I like. I don't like to pick features, little things here and there. Coinbase is basically the infrastructure and then it builds on top of that. And on top of that, there's a great podcast on investing like the best or something like that on Spotify. I will link it down in the description below, talking about investing in the infrastructure and not investing in features. So let's have a look at those numbers. Also, do check out the link down in the description below to receive the top 10 best stocks to buy now, or visit fool.com/couch investor. All right, so first up, a little quote here that is extremely important for those that might consider to invest in Coinbase. So it says here, you can expect volatility in our financials given the price cycles of the cryptocurrency industry. This doesn't faze us, because we've always taken a long-term perspective on crypto adoption. We may earn a profit when revenues are high, and we may lose money when revenues are low, but our goal is to roughly operate the company at break even, smoothed out over time, for the time being. We are looking for long-term investors who believe in our mission and will hold through price cycles. And this is extremely important if you want to invest in a company like Coinbase, because yes, you can look at PE ratios all day long. But then again, also PE ratios, if you're looking for the last 12 months, it's a lagging indicator. If you look for the future, you can't really calculate that because even Coinbase doesn't really know how to project future numbers because, well, crypto is extremely volatile. Now, this week, they went into earnings at PE ratio of 4 or 5 or something like that. But then again, now they're not profitable. So you see how fast things can change. So key metrics here, obviously everything is down quarter over quarter, and sometimes it's still up year over year, sometimes it's down year over year as well. We see here monthly transacting users 9.2, obviously down quarter over quarter, but still up from Q3 and from 1 year ago. Trading volume is down as well, quarter over quarter and also year over year. Assets on platform down a little bit, but still significantly higher, let's say, than last year. As for net revenue, net income, adjusted EBITDA is still positive for this quarter, barely, but still positive, even though they are investing a lot in their business. They're hiring way too much, in my opinion. I think they hired 1,200 new employees, which in my opinion is a bit too much. I'd rather have them buy back some shares, which they mentioned during the earnings call. Actually, someone asked about that and they said that we have not made any commitments to return capital to shareholders that I'm prepared to share today, either in the form of dividends or share buybacks. So it's a bit dumb if you ask me, but hey, what can you do? So some more metrics here. Trading volume, it's in billions of dollars. So again, down quarter over quarter. Retail a lot, institutions a bit less, but still up year over year. As for retail, that's actually down year over year. Bitcoin trading volume as a percentage of total. So Bitcoin has gone up quarter over quarter, still down year over year. Same thing with Ethereum, even though that's flat year over year. And then other cryptocurrencies up year over year, but down quarter over quarter. As for transaction revenue as a percentage of the total, same story here. Bitcoin and Ethereum are up quarter over quarter, down year over year, and then other crypto assets, same thing as before. As for assets on platform, down quarter over quarter, but still up year over year, so that's fine. Assets on platform as a percentage of the total, so they're gaining more in Bitcoin, a bit less in Ethereum, year over year, more in Ethereum, less in Bitcoin, and then more in other crypto assets, and then in fiat, basically flat quarter over quarter and a bit more year over year. Now, as for net revenues, there's obviously the transaction revenue, which is most of it. And then there is subscription and services revenue, which right now is at around 13% or so. Do expect this number to grow, especially with Coinbase One, their subscription service, which in a crypto market might not be such a great success, but eventually I think that will contribute more to revenue. And as you can see here, operating expenses, quarter over quarter, that's up, and year over year, that has, well, more than doubled, even though the overall business is down significantly. Now, as for the outlook, they expect, well, continued decline in April, both in crypto asset volatility and crypto asset prices, which they believe are associated with weakness in financial markets. For example, the Nasdaq Composite declined approximately 13%, and the price of Bitcoin declined approximately 17% in April. Obviously, after this week, volatility might be a bit higher, but then again, the prices of all cryptocurrencies have crashed by a lot. So for Q2, they expect it to be down as well, quarter over quarter, and probably year over year as well. For the full year, nothing really has changed that much. They still accept, well, it's a range that is really insignificant if you want to try out some modeling here. So between 5 and 15 million annual average MTUs, and then all the rest remains the same as before. And last thing before we talk about the earnings call stuff, this is the historical transaction revenue per user. So as we can see, obviously 2021 was one of those years where, well, everything was extremely high, but overall, you can expect things to stay in that range here. So between $35 and let's say $45, $50 or so. So overall, nothing really surprising here, right? They already announced that this quarter will be, well, worse than the last one. Now they're just reiterating that the next one will also not be such a good one. They knew very well that 2022 is going to be a year of investment, and that's why the quote at the start is very, very important. Don't expect it to be profitable every time. They can be profitable if they want to, but as they mentioned during the earnings call, they also tend to see the down period as a big opportunity because they're greedy when others are fearful. They tend to be able to acquire great talent during those periods, and others pivot, they get distracted, they get discouraged. And so they tend to do their best work in a down period. If I didn't know better, I'd say he's a big fan of Warren Buffett, whereas Warren Buffett is not such a big fan of cryptocurrencies. Now, the next thing they mentioned during the earnings is that they reiterated that they're aiming to manage to a maximum of $500 million adjusted EBITDA loss, even if they are in a prolonged market downturn. So that's okay. That's a nice little positive right there. And then, as I mentioned at the start of this video, Coinbase is really building the infrastructure, and that's why they say here. So they think as more and more cryptocurrencies keep being built and the existing companies integrated, they're just going to sell picks and shovels during this gold rush, which to me sounds very, very good. So overall, to conclude, look, right now Coinbase is in a healthy place. Let's say they've got a lot of cash on balance, which is why I wanted them and I want them to maybe buy back some shares. Obviously, right now, with so much uncertainty, maybe they will be able to use that cash to acquire other companies, because they did mention that M&A is probably something that they're looking at. There's obviously Coinbase Ventures, where they invest in various companies such as OpenSea as well. So in a time like this, in a crypto market, in a crypto winter market, I should say, where a lot of maybe companies are losing money, maybe now is the time to deploy that cash since they are in a strong position. They can take advantage out of that. Like they said, being greedy when others are fearful. Overall, right now, I have no plans on adding more Coinbase shares to my position. It is, I believe, on the channel's portfolio. You can check it out, stockcar.io, link it down in the description below. It's free to follow, but I'm keeping an eye on that. That will be it for this video. Obviously, do share your thoughts on whatever is happening right now in the crypto industry. Are you adding to Coinbase? Do you hold it? Did you sell it? Let me know down in the comments below. If you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. Do check out those two videos as well. And I see you all in the next video. Bye bye.